like, wait a minute, you could actually do that?
I would like to sell it, but I'm looking at 3.25 rate. No, I can't.
We bought a 500,000 square foot mall.
And another one.
I know what you're doing. It's called recency effect.
Commercial real estate, it's a dead game. It's a spread between your cap rate and what you can borrow from the bank.
So I want you guys to listen. This is very, very good point.
Do not buy properties in HOA.
Do not buy condominium. Why?
Value Add Podcast. Unfiltered insights from real estate's most successful players. Always adding value.
Commercial real estate is undergoing tremendous changes right now because of AI and other technologies. And today, in this video, we're gonna go in depth about it. I'm super excited about this episode because my friend, my partner, Saul Zenkevicius, flew in from Chicago to meet with me, and you don't wanna miss this one. Because here, we're gonna talk about our partnership, we're gonna talk about how he finds smoking hot deals, how we collaborate together, and how ultimately we were able to get Saul to a $115 million portfolio size in less than 4 years. This episode is gonna be one of the best ones. Please watch till the end.
Always adding value.
Saul, I have to apologize.
All right.
In this episode, I wanna ask straight questions and unapologetically, I want you to be radically transparent with me and the audience about the experience we had building our deals together and the issues we had. Let me ask you a direct question. How much money did you lose on your worst commercial real estate deal?
$700,000.
$700,000?
Yes.
Explain to my audience.
Yeah, that was okay, guys. So this is a lesson, and that's probably a lesson also to you and for everyone is listening. Do not buy properties in HOA. I've heard it's
HOA. What is HOA?
It's a homeowner association. In commercial properties, typically that will be a property owner association.
So like a condos.
It's like a condos, but for commercial real estate properties.
So do not buy condominium. Why?
Do not buy. Well, I've heard it many, many times, and I've had my hiccups in residential properties, right? But you will always encounter some kind of interesting resistance, and your future plans somehow will be adjusted with the POA HOA because you just don't control that situation. And
so you're not truly the owner of the property. You're owner with a bunch of other people.
Exactly. You're just in partnership with 200 other people and 200 other opinions, and you don't own the board. You don't have a seat on the board, and you're at the whims of someone else's agenda.
Yeah. So sorry to hear about that. I know you told me about that deal before. It was a very painful experience, but now you know, school of hard knocks, right? Make a mistake, 700,000. You never get that from Harvard, right?
No, I could have probably muscled it through and stay for next 10 years and figure this out. It was just not worth it to go through that painful experience anymore. It was deliberate decision to exit early and not to deal with bullshit.
From being a realtor in the past, how many square feet of real estate you own, how many deals, and what is the size of your portfolio at the moment?
So at the moment, it's over 2 million square feet. In terms of size, over $100 million portfolio. That's not only my share, that's with multiple partners. Would say 3-4 main partners that I own. But that's where I'm an operator and I'm a sponsor on those deals where I sign debt and I'm responsible for those buildings. Yeah.
And so that's all happened since 2019, 18?
Transition. I started my first building 2017. 18 was closed. And then I was still dabbling between commercial real estate and housing until 2020. In 2020, I sold all my houses and I had apartments, and I sold. And then
went to full time.
That summer went just bought warehouses. And that was actually when we bought our first big building in Milwaukee Tech Center. We bought a few smaller ones. When I say smaller, be careful. It was 20,000 square feet buildings, and it's not. It's still a great building. It just maybe feels smaller right now.
So tell our audience, who was Saul before becoming a value-add real estate investor?
Okay. So I'll give a 2 minutes commercial or whatever it is. So I started real estate as an appraiser. Then I started buying. It was in early 2003. Then I became an agent. I started selling and buying homes.
So you're an agent.
Yeah,
nice.
I was an agent. Yes, I was a Century 21 agent, and then I put my own established my own team. Then eventually I started fixing.
Didn't you get into KW too?
Yeah, I was KW agent as well, and we launched one KW office in Chicago. It was a 200 agent office that I sold my share, and then during that time was fixing and flipping homes.
How many years have you fixed and flipped for?
I fixed and flipped for many years as a side hustle while I was doing brokerage. But like full time, it was from 2013, 14, all the way to 2019, so like 6-8 years. Probably 6 years full time. And we're fixing and flipping, 100 plus homes a year.
Wow,
more than that.
big operation.
Mm-hmm.
And so why did you do the change from house flipping, which is 100 deals, to commercial real estate value add business?
Really, it was a few kind of eye-opening moments. One, when I bought my first industrial building that I own 20% of it, we stabilized that. It was 2017 and 2018. We stabilized it. I did the math that it was a 86,000 square feet building, and it would take me approximately 70 homes
to do one deal.
To do same amount of cash flow.
70 homes versus one deal. Wow,
exactly.
Imagine that. That's crazy.
Yeah. So that was one, and then meeting you and talking about commercial real estate and just kind of looking at scale of how much you can do with one property. And the cash flow was just not, it was not even comparable to commercial real estate.
So what held you back in the beginning to get into commercial real estate?
I think mainly it was understanding the risk profile. Because when you look at when you're coming from the housing, right? So there is your cadence in housing, usually it is maybe from month, 2 months, and maybe flipping in average the house called 6 months, right? But you're kind of thinking in the months, right? Your calendar it sits in the months, and that's how you do your
2-3 months a deal.
Yeah, exactly. But you're still thinking in the months, right? And that's how you're looking at the risk. When you look in the commercial real estate, you have to look in years, 1 year, 2 years, 3 years, right? And if you're able to kind of spread it out in your mind, that you're going to get in and get out, and this is your cash flow as well, then you're realizing that the risk actually is no more higher than residential. But before you understand it, before you feel it,
scary.
It's very scary to sit in a building for 6 months and have no income, or 12 months, right? So that was I think the main challenge for me.
So it's very interesting how when I met Saul, he's a very, very active residential guy, and I was an active residential guy before I got into commercial real estate in 2013. And he says, I really want to get into commercial real estate. And I said, well, here's the thing. I'll give you the playbook. We'll work together. You run around, find deals. I'll work on capital and structure and stuff. We did everything 50-50. We raised capital, found deals, and our partnership is still strong. We did have some problem properties, and we're working through them. But we haven't lost money on them yet. It's just been an interesting deal.
Well, the good thing, the problem, I think I want to label that was past year and a half. Right now, it's definitely
coming back. Yeah,
it's coming back right now.
So, so one of the things that I want you guys to know about Saul, also, he's a multi-Ironman. Like he has done Ironman multiple times. How many times have you done Ironman?
I mean, full Ironman, full distance is only one. The remaining, what it was, 7 or 8
half Ironmans. Yeah,
half Ironmans. Yeah.
So if you do Ironman, explain to our audience, what does it entail?
Yeah, it's a full Ironman depending on your fitness level, but that's 12 to 15 hours of pure torture or mental test. And so what you do swim, bike, and run. So you swim 2.5 miles. You buy 156 miles, and at the end is a full marathon.
Interesting.
You'll lose 10 plus pounds.
Training for it.
Yeah. Well, you're training about 6 months. While you're training, I normally, this is not my typical race weight. When I used to compete, I used to have 2 two sets of clothes. It's prior to race and
After race.
and post race, right? And it usually fluctuates between 20 and 30 pounds in every single
Think
year.
about level of resistance.
Yeah.
So I, all my life, thought I'm not an athletic guy.
Yeah.
I'm just not built that way. And the idea of running a marathon was so remote, impossible, like for crazy athletes. And then, of course, imagine me meeting somebody who does Ironman. I'm like, wait a minute, you can actually do that? Marathon is just a meh. It's like a very little, not very difficult part of it, like swimming.
End.
Yeah, so very, very interesting. And that changed my perspective. Of course, I didn't do Ironman, I did Olympic triathlon. And I realized how much training and mental resilience you have to have. And if you apply that discipline and resilience in real estate, the answer is right there. The 5 years from 2019 where we met to today, and I think Saul hasn't bought any properties in the last 2 years, right? You kind of basically were
for a year and a half. He didn't close any for a year and a half.
Yeah.
I was the net seller compared to net buyer, and I came back out of the woodworks. Starting February 1st, and
now we've got 5 deals under
I
contract.
have 5 deals under contract.
Let me ask you a question. How do you feel about the state of commercial real estate today?
This is my first cycle in commercial real estate. I've been in residential in 2008 and 2010 cycle, so I've seen those waves. But let's say compared right now to 5 years ago, right? What definitely the biggest change is that right now it is easy to buy, relatively easy to buy. Still very hard to find good deals, but it's very hard to sell. I remember 5 years ago was vice versa.
Yeah.
Was easy.
Rates were lower.
Yeah, exactly. Yeah. Now, another thing, obviously, the game of real estate in terms of cash flow significantly changed because commercial real estate, it's a dead game. It's a spread between your cap rate and what you can borrow from the bank. My first buildings, we were buying, we were getting in 500, 700 spread day one.
Wow.
Between the cap and...
Explain what the spread is. Basically, it's your cost of capital was 3%.
3%, and
you're buying
at 8 or 9 caps, right?
Nice. So cash flow was really strong.
Cash flow really, really strong at the time. You didn't have to think about getting a IO because you were swimming in cash flow.
IO means interest only.
Yeah, interest only. Yeah. So what's right now happening is that your spread between cost of capital, let's say debt, is 6.5% or 7%, and you're buying something at 8 or 9. It's only 200 basis points. So it's like 2 times less than before. So you have to buy much deeper discounts compared to before, right? So that's one thing. Another thing, what I'm seeing is definitely getting democratized. 5 years ago or 10 years ago, it was way more, concentrated in, old boys club because information was not available. Right now, information is becoming more and more available. You don't have to, you don't have to graduate, university, MBA to underwrite a deal. You can have AI, you can have massive spreadsheets, and really, real estate is even if it's a slow industry, but you have to consume insane amount of information in order to make a decision.
Yeah,
you have to be either 200 IQ, like our friend Nikita, who can calculate massive amount of information without a calculator. But if you have an AI, you become a Nikita right now.
Yeah.
Right?
You can just be a college, no college education, and you can still be operating like a Harvard grad.
Exactly. So that's that. So obviously AI is democratizing that. I think maybe AI is a little bit overhyped how it's going to change. I think next thing, what I see is the real estate is going to get digitized, which is probably is going to be put on blockchain, which is a fancy word, putting the real estate in Google Sheets or spreadsheet that cannot be compromised by anyone else. So I think it's going to be digitized in terms of tokenization of real estate. So that's how I see it.
Talking about AI and commercial real estate, Saul, of course, started developing an AI agent for finding deals. The biggest problem in commercial real estate or value add game specifically is to find the right type of deals and the right type of demographics. And with this AI tool, the AI agent that Saul developed, he created systemization and a pipeline for AI, for how AI can assist you in finding deals. Can you talk about your AI platform and how it works?
Yeah, so I built an AI agent. It's technically your assistant that helps me with my main bottleneck. Main bottleneck for me in commercial real estate. I know people say that there is no deals, and we have a saying, deals are galore.
Yeah.
Deals are galore if you really go and communicate to the world that,
Searching
hey,
process.
I'm the buyer, just send me the deals.
Yeah.
So you're getting deals from the brokers, from the Crexy, from LoopNet, from anyone, but then you have to make decisions.
Analyze them.
Analyze those, because let's say if you're having 50 deals coming into your face, you have no way to analyze all of them. And if you're not Nikita, who can analyze like that, and just looking at the first layer, someone has to really quickly look at demographics, understand quickly how much meat on the bone left to improve the occupancy, and those things has to be done automatically.
Yeah.
So pretty much I built an AI bot who takes those emails with minimal information, puts in a platform called CRM and minimal underwrite, and gives me a very brief square feet, price per foot, NOI, future NOI, cap rate in place, demographics, and based on that, it doesn't give me the full pro forma. Based on that, I understand, okay, now I have another half an hour, 20 minutes, get on a call with the broker, get all the information.
So it shortens your analysis by 80% or more.
80%, yeah. Because if you're going to get on 50 calls on that day with the brokers, first of all, you're not going to be able to get on 50 calls.
Yeah.
And if you're going to get on 10, you're probably going to lose 40, which probably could have been deals, but you didn't have time to jump on them.
So how much money did you spend on that AI development?
A little over $150,000, right?
Okay.
So that's another thing on AI, right? Now we all have AI, $20, ChatGPT, but really I'm realizing that if you want to have someone really good, we'll have to pay for those tokens, which is actually the gas for the AI, which it's not $20. It costs pretty much thousands of dollars, and I know friends who are spending tens of thousands of dollars a month just running certain programs just on AI. Yeah.
So can you explain to our audience, if I use your AI agents, what do I get and how does it help me improve my business?
So from the numbers perspective, right? So from numbers perspective, myself and Cole, who is on your team, are the main users on that system right now. So I look at it as a time savings, and I actually have a dashboard. So on my end, I save every single day between 2 and 3 hours, 3 hours a day to analyze those deals. On the calls side, he says north of 5 hours a day. So it's just giving you additional time, and how much you value your time, whether that's $200 or $1,000, you do times that. So it's a huge time saver. And from Real Deals, I have 5 deals right now in a contract.
So it finds you deals, it underwrites your deals.
Exactly.
Organize all the data, and it's connected to your email, right?
Yeah, so it's technically a bot that sits in your email. It only can work on Gmail, and it scans every single email. And if there's a signal about the property, it starts boarding this property into the system, starts underwriting. Or if there is additional follow-up email from the broker or attorney, and there's a piece of information, it gets this information, attaches to the file, and updates the file. There will be a price or different rent roll or whatnot. So it just kind of sits in your email like your executive assistant 24/7.
Wow.
And pulls that information and sorts it out for you.
Let's talk about your pipeline right now. What kind of deals do you look for now, and what kind of deal size, margin, territory? Can you explain that so that I want our audience to try to get as much value out of you possibly, because you can help them to find deals, because our whole goal is to add value to our audience.
Yeah, so the way I look at deals, I kind of look at in my from information I'm getting from the market, what is demand on the leasing side, or what's the demand actually on the exit side. That's how I look at it. So for the last year, I think what I'm feeling right now in Chicagoland market or in Midwest, the highest demand in leasing and highest demand in selling those properties, it is small bay industrial, multi-tenant retail, which is shopping centers between 10,000 and 100,000 square feet. I think sweet spot 30,000 square feet, and iOS. iOS, it's outside storage. Outside storage.
It's a site where you can put equipment and vehicles, parking.
Vehicles, truck parking, yeah. I was lucky. I bought 2 school bus terminals about 6 years ago, and I think it's a smaller segment. Then I was able to watch to have a pulse, and I saw how leases increased in terms of size and how much demand it has right now. If you have a site that has 4 or 5 acres and it's kind of in a dense area, and zoning still holds that you can have outside storage in terms of
That's
heavy
gold,
equipment,
right?
it's gold. Because
So guys, listen to this. If you find a piece of land that has zoning that allows outside storage, and you can get somebody to pay your rent for it, you don't have utilities, you don't have any maintenance. All you got to do is have asphalt, maybe some fencing, right? And Saul and I have multiple of these types of properties already in our portfolio, but that's one of the things that is really in high demand right now for whatever reason.
Yeah, and here's and when you think about it, right, it's why they're so profitable. Let's say for me, it's just because there is not enough data on the leasing side. They're not so easy accessible to understand what is the rent on the other side, and those rent increase significantly more compared, let's say, to apartment rents or
So
any
there's
other
the
rents.
margins are much higher because of the unknown of
Unknown, exactly. And when you buy from those owners, they don't have this access information.
So can you give us a case study of one of the deals you were working on, possibly? So what are you buying it for? What's your cost of rehab, and what do you think you can sell it for right now?
For example, right now we have this deal in Milwaukee under contract, right? Hopefully not jinxing now because we have it tied
We'll
up.
publish it after we actually close on it.
Exactly. So we buying it for 1,275.
1,275,000.
Yeah, 1.2 million, seven. Yeah, exactly. And then this is 14,000 square feet maintenance facility on 4.5 acre site in Milwaukee. We're buying it vacant, so it has to be either
The risk
cash.
is if you buy it, you got to pay 15 grand a month to carry the building.
Exactly, right. And I went hard earners money. I negotiated with a seller that he will allow me to market the property for lease, because I sense that we probably can get $16,000, $17,000, $18,000 a month triple net for this type of site. I have a very similar site in Chicagoland, in Naperville, and we used to get over $30,000 a month, and right now we're negotiating with $50,000 a month in rent. So I know those rents went up significantly. Probably seller did not know that, and we right now negotiating 2 leases actually in that price range. If we're gonna sign that lease, those leases with the national tenants, a lot of times the one tenant is gonna be national tenants. They trade still at 6.5 cap rate, between 6 and 7. And that will be between $2.5 million to $2.8 million value property. Now, if it happens.
So you will be able to buy the property for 1.275. How much do you think you have to spend on rehabbing it and whatnot?
Yeah, so I think we were lucky. This property was improved significantly in 2014. The owner put about $1.4 million into it. It was also a national credit tenant, so they moved. Now the big cost will be to the broker,
Tenant commission.
to the broker,
because we always want to pay our brokers, right?
Exactly.
And our brokers, we always pay you, whether you have a signed buy rep agreement or not.
Now on this one, actually, we're paying a brokers too. It's not for every deal, but in this deal we'll pay 8%.
Oh, we are paying the broker 8% fee on this thing.
This is not
wow,
for
that's
every,
amazing.
it is not for every deal, but in this one because
we want to make sure he benefits from
exactly.
it.
And only some brokers have the pull to those national tenants.
Yeah.
Because then when
So how many years is the lease?
So we are negotiating 10-year lease.
10-year lease.
So his commission is going to be between $150,000 to $180,000.
$150,000 to $180,000 goes to the broker just finding a tenant.
Just finding a tenant.
And then what is the value? If you bought the building for $1,275,000, you paid him $150,000 commission
plus call $100,000 in rehab,
and you got to spend $100,000. So all in, you're going to be at about $1.5 million.
1.5,
and the value of the property will be
2.5 to 8.
So and you can sell it right away after the lease is signed.
Those assets still trade like back in
Gold
good
rush.
old days. You will pretty much put in a market and you'll get multiple offers.
So in other words, I want you guys to listen. This is very, very good point. If you find a piece of dirt with a zoning that allows for outside storage or parking of trucks, and you can find a tenant for it, you can make a lot of money. Like in this case, Saul is going to make anywhere from $1 million to $1.3 million profit in less than 6 months.
Yeah, listen, we will try to structure the sale post 12 months, so we don't have
Ordinary income.
Ordinary
tax.
income. We're going to have capital gains. Yeah.
Very important because obviously we want to pay taxes, but reduce the tax liability.
Exactly. Yeah.
As a operator of 2 million square feet of real estate, what kind of challenges are you dealing with today?
I don't want to name it challenge, but there's definitely bigger obstacle. It used to be leasing, right? So leasing and vacancies increased. For example, in industrial buildings, a small building, we used to have a line at the door all the time in tenants. Right now, you have to work. You have to spend more.
So it's not as hot anymore as
it's not as hot as anymore. So in a sense, it's a challenge. But for me, it's an advantage because we were always really good in leasing. So right now, we're actually even better compared to the average.
Got it.
So
that's a challenge. Number one, leasing.
Number
else?
two, it is definitely increased rates. Increased rates.
Interest rates for mortgages, yeah.
Increased rates to refinancing is a challenge when you planned on one rate, you're refinancing another, your cash flow is went down compared to what you planned, let's say 3 years ago, right? Or let's say I have a property in Crete, I would like to sell it, but I'm looking at 3.25 rate, I can't.
So here's the biggest problem, right?
Yeah.
I'm not really necessarily political one way or another. I'm right in the middle.
Yeah.
But if they drop interest rates, our economy is going to improve because there'll be more deal velocity. But it might impact inflation also. So this is where we're kind of stuck, unfortunately. Do you have any challenges with the financing? Is it harder or easier to finance properties right now?
Oh, 100% it is much harder to finance compared to 3 years ago.
Because deals don't pencil as much.
Deals don't pencil because debt service ratio are not covering like it used to be before. So that's a challenge. The challenge is more challenging, but I think we are in so much better position compared to, let's say, other models where you were focusing only on rent growth. 99% of our properties were value add, meaning we were buying below to the market. So I don't have any. We didn't have any property that we cannot refinance it because we cannot service
because
the debt.
Our base is low. So effectively,
but
if you're a value add investor, you don't necessarily buy properties on cap rate because you buy it with distress, with vacancy. And so once you stabilize it, your value is so much higher than what you bought it for. Refinancing is not a problem.
Yeah, so I think the challenge is to come to acceptance that performers that you performed, let's say 4 years ago, that actually I looked at it recently. I looked at pro forma that the rates are at 4.5%, right? And it's not. But our rents were so much higher. I'm talking about school bus terminal. I didn't expect our rents going to be so high, but my mortgage is much higher. I'm still doing great.
Still doing okay. All right. I'm going to ask you an uncomfortable question now. All right. I know that one of the biggest challenges that you and I have been dealing with is buying malls, dying malls specifically.
Yeah.
And me and Saul, in my infinite wisdom, I brought him on board. We bought a 500,000 square foot mall with our friends and partners.
And another one.
And so let me ask you this kind of question. What is easier, Ironman or remodeling a mall, stabilizing a mall?
I would do another 20 Ironmans.
Before you do the mall?
Yeah.
Guess what? Don't do malls. At least not until we understand how to do them, right?
Yeah.
To stabilize
I still think it's a great business. We were just off on timing.
Yeah.
It's just not 3-year project.
It's a 5-year project.
Exactly.
Yeah. We count if you try to so you might have the best deal, but if you hope to exit the deal in 2 years and it's a 5-year deal, it becomes a really, really, really big problem because it's a mismatch of your expectations, especially if you have investors, which gladly, we don't have any investors in this one. We funded all it ourselves. But so 20 Ironman, that's a good one. That means I am running 20 marathons right now concurrently. Nice.
There you go.
Thank you. So our community called Value Add Network is where we I educate people based on my experience in multiplicity of deals. Education is only a very small part of the community and why it was created in the first place. I ultimately created a community because of you, because when we teamed up and we connected very quickly, you're really good operator, honest, responsible. In the first year, we did 5 or 6 deals, which was crazy. So I'm sitting here in Minnesota. I get on the calls and video calls, and you go to Archer, you go to Crete, you go to all these properties. I'm like, man, I'm doing deals in Chicago. All of my friends here are scared. Like, how the hell are you doing deals in Chicago? I got a secret weapon, Saul Zenkevicius. Then I'm like, man, I can totally do this across other states. So I found people in Florida. I found people in Texas. I found people in Michigan. And they're all really good friends and partners. And so we started partnering. But then communicating with everybody is so hard. You got to talk to 20 people. And so I said, why don't we organize everything into a 1 Zoom call per week where we all jump in, we share experiences, we talk about our deals, and then you learn from each other, but also build relationships and collaborate. And so the other part of the community is doing deals together. We've closed on 5 deals in the past 60 days. And we did deals in Champaign, Illinois, Milwaukee, Wisconsin, did a deal in Maryville, Indiana. I think we're working on multiple deals in Michigan. You have deals in Milwaukee.
Yeah.
And so how do you see the evolution of this community, and how can you add value to people in the community with your hustle and your experience?
Yeah, so I think first that this community is very different than I see other communities, let's say, in the nation. Number one, definitely because you have in the front that notion about genuine and true relationships.
Yeah, focus and invest in relationships first.
Yeah, and really the community is going to be as strong as the relationship is going to be, strong. Another very distinct factor, it's really community for doing deals.
Yeah.
Not only paying the money and getting education, but really, everyone is involved and it's pretty much in your face, that everyone is doing deals and you're just getting energized. And if someone is doing a deal, you want to do a deal, right?
I want to make a correction. I've actually changed the program a little bit where we will pay people, qualified people, pay qualified people to join our community. And if you're interested in how that works, please DM me below. I'll talk about it. But we do actually have a new program where we'll pay our community members to join.
Here you go. That's another, I never heard about it.
Always adding value.
Exactly, yeah. Now, in terms of, how can I add value? I think I'm trying to educate as much as possible of other folks who need knowledge, or, anyone from community needs a call or text. And pretty much I'm constantly with someone talking or texting and advising. But also I'm building AI, which I'm sharing. I build it for myself and I'm sharing it right now.
I think AI is going to be definitely a game changer.
I have deals all the time. Something, that's always negotiating, and I can't do all those deals myself. So
how many deals did you assign in the past 2 months? I know you assigned me one last year when I went to Italy.
Yeah.
We went to Italy with your family, went there too.
Yeah, so in the past 2 months, 2 deals so far are assigned. I have 5 in a contract, probably end up assigning 1 or 2 more.
Yeah, awesome.
That, yeah.
So basically you can find deals for our people and assign it to them so you can go make money. Yeah. If anyone is familiar with wholesaling and real estate, that's basically the concept here. And I told Saul, let's just be generous and don't charge too much. But also, or if you find a deal, you can stay in the deal in lieu of a fee and basically mentor people on how to extract value out of it.
Yeah, that's another, right? It always has to be down payment for the next deal,
Yeah, that's our slogan too. Yeah. Every deal is down payment on the next one. So that way, every deal precipitates, hopefully, a next deal, and everybody wins.
Exactly.
Yeah, awesome. One of the biggest things about the industry is it's full of sharks. I mean, they say dog eat dog world, and people are so consumed by money and cash flow and ego. And I wanted to change that paradigm. I wanted to create a community of a safe space where you can talk openly about deals and know that nobody's going to steal it.
Yeah.
And it's hard because everybody has they come from different backgrounds. But when you show them abundance mindset, when you tell people, look, it's just one of many deals you can do. You know, there's so many deals. There's so much capital available to you. All you got to do is add value. And how do you add value? Learn, you improve yourself, you find opportunities, find capital, or work in the business. And so one of the things that I also wanted to comment on with the AI, everybody's scared of AI taking jobs and you know, unemployment going high. I feel like a handshake is always going to be a handshake. I don't think AI can replace it.
Yeah.
And so if we build a community where integrity is at the highest level, where everybody focuses on adding value to each other first, and then make money, and then create cash flow, I think that's going to be what will make our community very profitable for everybody, number one, but also will add value to communities, tenants, and anyone else, anybody else who is involved.
Yeah,
So,
I agree to that, and I want to comment that. I think once you stay in the business for quite some time, let's say one of the biggest rewards is really when you're putting the deal together, you finding the way how to bridge the gap between everyone, between myself, the buyer, the seller, and there is always a certain amount of animosity and due diligence, and that everyone has to give and take and give and take and give and take. And if you are that orchestrator of making that catharsis experience eventually happy experience for everyone involved, I think that's the biggest reward.
you're talking about sellers and then partners too, investors,
Partners,
LPs, limited
tenant,
partners.
everyone. So
everybody wants a bigger piece of the
there's
pie.
a title company, there is banks, there is lenders, so there is
Everybody gets a piece into the cookie jar.
Exactly, and everyone comes in. What's in there for me, right?
Yeah.
And you have to make the process that okay, everyone has to give in a little bit, you know, and at the end of the day, it has to as a whole, it has to be a positive experience for everyone. Everyone has to make money. So I think that's the formula I'm trying to do every single deal. And I really enjoy when not every time it's able to succeed. Sometimes you have to work for a deal, but if you make it happen and reframe the seller's mind and you frame banker's mind and just kind of just put it together, it's just so amazing.
So structuring deals is really
exactly, and you teach that, and I learned a lot from you. And if you can teach the community, there is a way to change the industry in a sense,
empower everybody to
exactly.
Yeah. So I've actually been very inspired by reading a book about Tremel Crow, his biography.
Yeah.
And he had about 166 partnerships, and that was the biggest real estate company, development company, 30 to 50, I don't know, 60 years ago. But Tremel Crow represented ideals in handshake agreements, in partnering with people that I aspire to have. And one episode where they're arguing with each other about who gets a bigger piece of the pie. And it wasn't the conventional sharing. They were forcing the other side to take more. There was something more.
It was two partners. Two partners wanted to exit.
One of the partners wanted to exit, and he was offering more money for the guy to exit, and the guy, no, I don't deserve it. And that's so beautiful to watch because they did embrace abundance. And for them, the relationship was way more valuable than that deal.
Yeah.
And I had actually some situation like this here, and it was like weird. I offered Sean to be bought out from Shore Commerce and a couple of other properties. I think in Indian Ripple as well. And I shared with them some of the assets in Minnesota because he's close. And we agreed on a deal. We shook hands. I was in Cabo. And then he brings me the contract, and contract is $120,000 lighter on his side. And he's like, you know what? You offered me this and this. I did the calculations. You're being overly generous. You give me 120. I don't want to take that money. I don't think it's fair to you. I couldn't sleep. So how about this? I'll take less. I was like, what are you talking about? I did it deliberately because I wanted you to have more because you're such a good guy. You worked so hard. And he's like, no, I'm not going to take it. And so I know what you're doing. It's called recency effect. What you're doing is you're making me feel like I'm getting 120 grand more from you so that you can make millions of dollars on 5 other deals. And you know what? You're right. I feel obligated now to do a deal with you. So I almost owe you that $120,000 that you returned. So it's really interesting how it's a psychology, right? Reverse psychology with kids. It's the same thing, but on bigger scale with bigger numbers. So it was very interesting to learn. I know that you want everyone you interact with to be successful, especially your mentees in real estate? What are the 3 things you want to advise them so that they can build a successful real estate career?
Number 1, you need to go, you need to pick up the phone and call the sellers to buy direct from sellers. That's number 1.
Don't be scared to pick up the phone call.
Just to build the
Phone.
habit to pick up the phone and have the habit to call the sellers. Second, never let go of your pipeline. So pretty much focus always on your pipeline filling. Never stop the pipeline. You're too
Keep
busy.
building the pipeline.
Keep building the pipeline. Number 3 would be maybe a little philosophical, but I think I was guilty of that, especially in the beginning of the career. Always look back and be grateful what you have.
Gratitude, totally.
Be grateful what you have, because if you will have $5 million portfolio and you're still going to be chasing 10,
Yeah, it's always that.
you're going to be so miserable with a guy who has $1 million square feet portfolio. He
So it
understands
never
he has
stops.
enough.
Ask me how I know.
Yeah. Right.
I think the biggest thing I want to advise our viewers is focus on education. Learn the subject matter. This is a real life monopoly. Learn the game, get really, really good at the game, and then invite other people to play with you and be a good player, good partner, good borrower, good general partner, so that people come back. Don't focus too much on making money in the beginning, because in the beginning you're building your brand, right? And I'll tell you a secret. If your first deal is really, really good and you over-deliver, which is the hardest thing, by the way, you over-deliver on the first deal, here's what happens. Second order consequence is they double down with you. They'll give you more deals, the brokers will. They'll give you more money, the investors will. The tenants will work with you, they'll get more space. And that's how the snowball effect happens. And multiplied by months, by years, and before you know it, you'll have a $100 million portfolio. And you can obviously join the community. You can join our community. You can join, there's many communities out there that do real estate. I believe, for me personally, joining a mastermind community was a game changer. I was in many communities before, and I would absolutely recommend for any one of you, find something locally first. Work with people in your community, whether it's residential or commercial, but that's where the learning happens. That's where you can find mentors. That's where you can find investors and sellers. And you'd be surprised if you develop a really good brand, success follows your brand. And and always add value. I think that's one of the biggest things, is to focus on always adding value to others. And that's how you become a person of value or wealthy person ultimately.
Always adding value.
Once again, I want to thank Saul for flying out here to meet with us for this podcast.
Yeah, thank you, Rafik, for having me here. It was awesome to hang out. Looking forward to go on the boat right now, and always learning. And thanks for putting this community, and thanks for all your support and being a great partner. I really appreciate it, and I enjoyed this conversation.
Please comment below what you learned, what was the biggest takeaway from this podcast. Please follow Saul on social media. He's got Facebook, Instagram. Thank you for watching, and I'll see you in the next video.